Hey, welcome to the Guaranteed Retirement Guy Show. So today I'm going to talk to you about fixed annuities. So there's three different types of annuities that you need to think about. Fixed annuities give you a guaranteed rate no matter what. So if the market goes up, you still get that guaranteed rate. If the market goes down, you still get that guaranteed rate, kind of like a CD. With fixed index annuities, it can go up as high as the index goes. And then, of course, it's protected against any loss if it goes down. So, and then, of course, variable annuities, which are considered very high risk. They can go as high as the index goes, and they can go as low as the index goes. They can lose money, they can make money, and they typically are known for very, very high fees. So keep that in mind. So let's go back to the best fixed annuities right now that we're seeing. So right now, it's a high interest rate environment. And because of that, it's benefiting fixed annuities quite a bit. So what I do when people call into my show, or if they are reaching out to me and they're looking to invest, just park some money somewhere and let it grow and defer any type of taxes on those gains, then they'll usually look at some type of fixed annuity, or what we call a MYGA, a multi-year guaranteed annuity. So the way these work is people will call me up and I'll plug in some numbers. And so I'm just going to share an example of a gentleman that I'm working with right now. He wants to roll about $1.5 million into 6 annuities. So he's going to do around $250,000 each. He wants to spread it out among quite a few carriers. So he's trying to spread it out, try to diversify himself a little bit. And so here are the rates that we're actually looking at right now. So for a 10-year guaranteed rate, the highest that we're seeing right now is from Annuity, or American National. They're A-rated, and right now they're giving you a 5.45% interest rate, and that's compound interest. So to give you a dollar figure on that, he's going to put $250,000 into this fixed annuity. At the end of 10 years, he's going to get $425,017. Not bad. Not bad. So that's a great return for him. So he's going to put $250,000 and put it in there. And then he has a few other options for the 10-year. You've got Clear Spring, and they're A-, and then you've got Oxford. So Clear Spring, it's a little bit less. So now keep in mind, I'll go back to the Annuity. Annuity, I was talking about the Palladium fixed annuity. So the Palladium fixed annuity is known for having a very decent interest rate, and it is compound interest. Okay, so that is a 5.45. So going to the Clear Spring, it drops quite a bit to a 4.95, and that's compound interest as well. So instead of having $425,000 from your $250,000 investment, now it's $405,289. And then Oxford Life is actually the exact same rate, 4.95. And that the ending value in 10 years would be $405,289. Okay, so that's for the 10-year. If you look at the 9 years, Annuity has another one, and it's 5.45 as well. So now we're looking at, over a 9-year period, that $250,000 will grow to about $403,000. Oxford has another one, and so does Clear Spring, and they're around the 4.9 range again. And we're looking at that $250,000 growing to not $403,000, but growing to $386,000 or $384,000 with Clear Spring. So huge difference. I mean, you're looking $14,000 to $16,000 difference going with the Palladium annuity with Annuity versus maybe the Oxford or the Clear Spring. All right, so looking at the 8-year annuities, Annuity again has a 5.45, so they are beating everyone out. And you're looking at $382,000 ending value from a $250,000 investment in 8 years. Okay, let's look at this 7 years. So now we've got a few different ones. Annuity, of course, is beating them on the 7-year. And we're looking at a total ending balance of $362,000 from a 5.45 compound interest rate. And so that's $250,000 growing to $362,465. Now, the other ones that are pretty close but not quite as high is Americo. So Americo Platinum Assure Annuity, that is growing the $250,000 to $357,680. That's a 5.25% compound interest rate. And then the Sagicor. So this is the milestone MIGA, and it's paying a 5.2 as well. It's slightly lower than the Americo. Americo is 5.25. The Sagicor is paying around 5.2. So really the difference is like $1,000. At the end of 7 years, the $250,000 grows to $356,492. So if you look at the 6 year, now Annuity is actually paying the least amount. Isn't that interesting? So they're really competitive for the 7, 8, 9, 10 year, but when you're going down to the 6 years, now Americo is actually the one that comes out on top. So the Americo, it's the Platinum Assure annuity. Its guaranteed ending value is $339,839 from a $250,000 investment. So that's over 6 years. Then the other one is Sagicor. That is second place, and that's at a 5.2% compound interest rate. And you're looking at guaranteed ending value of $338,871. And then Annuity is third place. It's ties with Sagicor. It's also ending value is $338,871 from a $250,000 investment. So these annuities, I mean, as you can see, they kind of move around. Just depends on what year it is and how many years they guarantee it. Typically, the longer you guarantee, the higher the rate they'll give you. If I look at the 5 year, Americo, Sagicor, and Annuity are still kind of in the running, but now it's at the 5.2 to 5.1 range, and then after that, the 4 years is 5, and then everything's going down to like 4.9. 3 years, 4.9, 4.8, 4.6, and then you got 2 years, more in the mid 4s, and then for the 1 year, Clear Spring is actually giving you a 4.4. So what you're looking at from a 1 year, if you were to put $250,000 in, you're looking at $261,000 even for a guaranteed ending value. So really just depends on what you're looking for. If you want to tie up your money for longer periods of time and you want to take advantage of a much higher interest rate over time, then it might make sense to put your money in something like a 7, 8, 9 year fixed annuity. If you don't want to tie it up that long and you just want, more than what your bank account's getting, then maybe 2, 3, 4 years will work for you. So it really just depends on what the purpose of that money is. If the purpose of that money is just to sit somewhere and get a higher growth rate than where you're at right now, but still, protected against market risk, then fixed annuities can be a great solution for that. Again, when I look at these annuities, I actually look at A-rated companies. So I did filter all of this to A-rated companies before I put together this video because I wanted to make sure that, I can get some B-rated companies. I can literally take this away and say, I'll just take any. And if I do that, if I want to go for just the highest rate possible, and I don't care about the rates, because some people don't care. You can still get a decent company, but here's the thing. If I look at, here's a good example. So for the 10 years, Annuity is still on top. They're giving you a 5.45% compound interest rate. It's compound interest. Okay, so that's the thing you need to worry about when you look at fixed annuities. Is it compound or is it simple interest? So with compound, you're usually making more. So the guaranteed ending value for 10 years for a $250,000 investment is $425,000 and 17. So that is the ending value. Now, if you look at Equitrust, their B++, their ending value is around $2,000 less than that, and they're giving you a 5.4 compound interest. But listen to this. Now, this is important to note because I had someone reach out to me, and he's like, I want the highest rate no matter what. I don't care what it is. I just want to make sure it's the highest rate. But the problem is it was making less money than the compounded interest. So this one was actually, it was called the Safe Harbor, and it's a B++ company. It's from Atlantic Coast Life Insurance Company, and they're paying simple interest. They're paying in the year 1, 7.6%, and then year 2 after that, all the way through year 10, they're paying 6.6. So you think about that and you're like, wow, that's a great rate. I should totally do that. But if you look at the guaranteed yield to surrender, it's a 5.26% return. So we're looking at a guaranteed ending value of $417,500. To me, that's not worth it. I mean, that's less than what the A-rated company is giving you, and they're able to give you a 5.45, not a 6 or a 7, because they're giving it to you as compounded, not as simple interest. So whenever you're looking for fixed annuities, make sure you're looking for, yes, one, the highest interest rate, but also look for A-rated company, and also look to see if that interest rate is either compounded or if it is simple interest. And if you want me to look at the numbers, I'm happy to do so. Just give me a call, and I'll be happy to look at maybe some amounts that you're looking to invest, and we can play with the numbers. We can see, all right, well, here's what it would do after 3 years or after 5 years or 10, depending on what you want to do. And it's pretty easy to set these things up. And with interest rates being so high as they are right now, these are very, very popular ways to grow and protect your nest egg. So until next time, thank you so much, and we'll see you later.